All right. Welcome to The View from the Arch. I'm Dhruv Patel alongside Himanshu Sahey, and together we're the co-founders of Arch Lending, the premier destination to borrow securely against your Bitcoin and crypto assets. And today we're really excited to have a conversation with Michael Sonnenshein, somebody we've been able to work closely with as an advisor to us at Arch. Michael started his career off in banking across Bank of America, Barclays, JP Morgan, then went on to join Grayscale as employee number one, rose the ranks to the CEO position there, while Grayscale became the leading asset manager in the crypto industry. Michael, we're really excited to have you on today.
It's good to be here. Excited to chat with you guys.
Should be a fun one.
Yeah.
So let's jump right in, Michael. The first question, really starting with your journey, right?
Sure.
Why'd you pick crypto 10 years ago when it was such a small asset class? And just talk about your journey going from banking to crypto.
Yeah. So this was, I think crypto found me. I didn't find crypto, or at least I got to say that I wasn't seeking out crypto, right? I remember very distinctly my last role at a bank. I was at JP Morgan, and with CNBC and kind of financial media on the TV in the background, you know, most of the things that people were paying attention to were CPI prints or, you know, quarterly earnings from public companies. Maybe something about Bitcoin or crypto would pop up every couple of days, but it wasn't anything that people were really paying attention to. So this is around like December 2013, January 2014. And I think I decided, I was in business school at the time and was kind of meeting different types of other students who were pursuing their MBAs to either be an entrepreneur, start a business, take over a business, whatever it may have been. And it caused me to realize that I wanted to do something still within financial services, but whatever it was that I was going to do, I wanted there to be a greater attribution kind of connection, right? If I was going to do something really well, I wanted to see it and feel it in the business. If I failed to do something, I wanted to be able to see and feel it at the business. And so when I was trying to leave JP Morgan, a lot of my search took me towards like hedge funds, family offices, some good things came up. And I really had the fortunate opportunity to interview at the time at a company called Second Market. And so those of you who don't know Second Market, it was founded by Barry Silbert, amazing entrepreneur. Second Market at the time was facilitating private company stock transactions. So before Facebook and Twitter were public, this was a marketplace where buyers and sellers could meet and facilitate liquidity. Barry, however, just kind of being the guy that he is, was able to kind of get into Bitcoin probably as early as 2011, 2012. And it really rubbed off on him, and rubbing off on him, it rubbed off on the company and its board. And they had at the time started a Bitcoin investment vehicle and a Bitcoin trading desk. And so when I went in to interview at Second Market, which just to be very clear, I was clicking on a LinkedIn job posting for a sales role, right? So yes, I clicked on this, probably didn't even, actually I don't remember clicking on it. And yes, I eventually became the CEO of the company, right? So if LinkedIn is listening, we should do a commercial together, right? LinkedIn job advertisements. And I remember going in, I almost didn't go on the interview because I'd never heard of Second Market. Like my whole world was just squarely banks, and that was pretty much it. But I really liked, you know, some of the team, and they said, hang out and meet Barry. And I didn't know of Barry. Again, very siloed view of kind of financial services in the world. And I had probably about a 45-minute conversation with Barry. He talked about Bitcoin and where it came from and some of the ethos. He told me with confidence that Bitcoin was going to change the world. And like, think about that, right? I'm a young guy. I'm not married yet. I don't have kids yet. I'm early in my career. And when I guess I was certainly impressionable, like I'll admit that, but just to say with confidence that something was going to change the world, right? Think about academic settings, personal settings, professional settings. People don't really say something is going to change the world. And through the course of, you know, about a 30, 45-minute conversation, interviewing for this sales role that was going to lead sales for this Bitcoin product, Barry convinced me that this would be an opportunity to come help him build something, you know, career-wise. It's rare you get a chance to build. You gentlemen are building at Arch every day, right? It's a very different thing than waking up and being part of something that's established. And I very politely told Barry, like, it's great to meet you, but I think I'm going to go work at this hedge fund. And he's like, give me 24 hours. I'm going to make you a job offer. And again, coming from JP Morgan, where HR issues, take 3-4 weeks. I was like, there's no way this guy's going to make me an offer in 24 hours. And sure enough, he did. And so I took a massive pay cut, took a big risk, and decided to join him. And that was really the beginning of, a 10.5-year journey at Grayscale. And Bitcoin at the time was like $800, and largely unknown and misunderstood. And it was a great opportunity, and I'm really thankful for the experience.
Yeah, and that's an epic run. 10.5 years. You rarely see that in normal industries, let alone crypto.
Yeah.
What was that journey like? So you started very early on.
Yeah.
You saw all the ups and downs. Did you ever sort of question, hey, is an ETF going to be needed when Bitcoin's going through all these volatile cycles?
Yeah, it's a great question. I do have to say, looking you both in the eyes, I never questioned what we were doing or questioned my commitment to it. There were certainly no shortage of times where I easily could have said, no, thank you. Because I think over the course of 10.5 years, I actually went through 3 crypto winters, right? And so there were times when, particularly earlier in my career at Grayscale, when I was much closer to the sales effort, I was laughed out of rooms, right? And people didn't believe in what we were offering. They didn't think that this was a real asset or a real asset class. And this didn't have the characteristics or the attributes of the things that they were normally, investing in. They didn't understand whether or not it had intrinsic value. And so with 60, 70, 80% drawdowns in price, there were definitely opportunities to say, you know what, there's too much volatility, too much to stomach here. But ultimately, I think with each of those drawdowns and each of those kind of crypto winters we experienced, we learned a lot of lessons. I learned a lot of lessons individually and professionally. And I think each time we, and certainly the ecosystem that became built around Bitcoin and crypto more broadly, just kind of got stronger and stronger each time. So it was an epic decade. Let's just say that.
Yeah. And I'm fast forwarding a lot. You went from building out the whole team, eventually pioneering the ETF product and getting that approved. How do you think the sort of industry evolves here? Do we see an ETF for basically every major token? Do we see thematic ETFs for maybe meme coins, DeFi? How do you sort of see that play out?
Yeah, so there's no question that we are still in the earliest innings, I think, of where we could ultimately go when it comes to product creation around the crypto asset class, right? We have seen that this ecosystem and the participants in it have no shortage of creativity. And I say that because when I think back to getting into crypto at the beginning of 2014, much of the conversation was just around value transfer, right? Bitcoin was moving value seamlessly, between unknown parties, virtually for free, quickly, same speed as information, et cetera. And then over the course of the last decade, we've gone into everything from new protocols being developed to ICOs, to NFTs, to metaverses, to ordinals, to decentralized finance, to, the list goes on and on, how many new things have kind of emerged out of this. And so I think with that, we've seen a myriad of protocols launched, hundreds, if not thousands of protocols launched. And ultimately, over time, I do think there will be some consolidation. I think it's a huge, huge, huge moment of validation for the asset class that we now have here in the US, the center of the capital markets, Bitcoin and Ethereum spot ETFs. And we have, futures, derivatives-based ETFs as well, which is fantastic. But that's really, really just the beginning. Does that mean that we will begin to see, Bitcoin and Ethereum commingled with other more traditional assets and have those be wrapped into products? Quite possibly, right? People like diversification. There might be other assets that could go along very nicely aside Bitcoin or aside Ethereum or other digital assets. We also are at the earliest innings of seeing kind of other financial product permutations. Some of the things that a lot of people are excited about and waiting for are the approval of options on some of these ETFs, right? When you think about the ability to manage risk and kind of the depth and liquidity that's associated with some of the largest ETFs out there, options are a really important part of that. And so I believe that, that'll hopefully be an innovation, if you will, that we'll see over the next couple of quarters. And the introduction of that then also leads to other product creation, leverage and inverse and income producing and kind of all the other flavors that you typically see. Ultimately, I do think, the team at Grayscale and, other asset managers who have been creating products will continue to innovate. And I think they'll hopefully continue to be in front of investor demand where they do move beyond Bitcoin, they do move beyond Ethereum. They'll begin to develop not only products in their current form, but ultimately in the most liquid and form that can access the most and largest pool of investors through the ETF wrapper.
So do you think ETFs and spot are functionally different sets of investors, or do ETFs lead to investors buying more spot?
Well, I think it depends on kind of which way you look at it. There were certainly no shortage of investors that were not investing in crypto until ETFs emerged, right? They're used to having brokerage accounts, retirement accounts, where they're typically used to being able to buy individual securities, mutual funds, ETFs, et cetera. And there could be a variety of reasons for that. It could be because they want the protections of the ETF wrapper. It could be because they want to see all their investable assets consolidated in a singular place and be able to see it traded, custodied, liquid, et cetera. And there were, also investors that got on much earlier, right? That had already invested in crypto, that were excited about the risk reward that was embedded in those investments. And maybe with spot ETFs coming along, gave them the opportunity to make kind of additional investments and not have to, have a digital wallet or have it sit in an exchange or whatever it may be. Ultimately, there's no question that the overall pie, the base of assets that's embedded in Bitcoin and Ethereum now, based on the introduction of these products, has certainly expanded the universe. And that's the beginning of kind of creating this flywheel of more capital embedded in these products that can then lead to other innovations, a larger monetary base that ultimately drives the industry forward.
Yeah. And as you mentioned, crypto has evolved a lot. There's been a lot of protocols, NFTs, just a lot of innovation that's happened in the space. Curious, what made you excited about Arch and the opportunity to rebuild the borrow and lend ecosystem?
Well, there were these two really smart guys that I met. No, in all seriousness, I think that having been a part of the crypto ecosystem in, kind of 2019, 2020, 2021, when you really started to see for the first time, like the emergence of prime brokerage models in crypto, it was something that to me was very, very exciting coming from a more traditional, financial background where when you look at almost any asset, right, there's usually a spot market, there's a derivatives market, there's a lending market, there's a borrowing market. Like these are kind of the fundamental attributes that surround most assets. And so back in 2019, 2020, 2021, you certainly saw a spot market. You had seen the beginning of the derivatives market through like CME listed Bitcoin futures and things like that. But then it was kind of one of the first times where you saw folks being able to post crypto assets and take out, dollar denominated loans. And then you also saw for the first time those of us that had been sitting on crypto for years and years and years being able to deposit crypto assets and earn an interest on them, right? We were also in a very low interest environment at the time as well. So it was even more attractive to us to be earning a yield on those assets at the time. And I think fast forward to where we are today and having met you guys, couple months ago, coming out of this most recent crypto winter, a lot of those prime brokerage models didn't reemerge, right? In fact, we saw a lot of those prime brokerage models shut down, close shop during this most recent crypto winter. And so as I feel, and I do feel it, I palpably feel it in the air, we're kind of nearing this next kind of golden era of crypto adoption. It is simply not enough to have spot, to have derivatives. It's huge that we now have ETFs, but we do need to see the reemergence of some of these models where you can both earn interest on your crypto and you can also get loans against your crypto. And we need to see that built out in a very thoughtful way, much the way that you guys at Arch are doing.
So what do you think the future of borrow lend looks like beyond just posting collateral and taking a loan against it?
Well,
or earning interest?
yeah, so I think it can ultimately, probably lead to all different types of permutations. It can lead to product creation, right, as opposed to just folks taking individual loans or making deposits to earn interest. So I think that's certainly one area of it. But I think more importantly, I think there is such a important group of investors that are looking to ultimately get relief against these assets. I think that is one of the, at the moment, items that perhaps has inhibited some of the growth of the crypto ecosystem in many places across the street. Crypto, for valuation purposes, is considered a bad asset, and so getting even a deep discount or deep haircut on it is often kind of punitive for a lot of folks. And so if we can demonstrate business models that are appropriately lending and borrowing on top of these assets, have the appropriate risk management in place, I think that leads to kind of larger models and ultimately larger desks, and where a lot of that liquidity is ultimately being sourced and taken from, to be doing that with crypto in addition to the other assets they're already doing it for.
And do you think as these large institutions come into play, do traditional banks ever offer crypto-backed loans or interest in crypto?
I think ultimately they're going to have to. I think the crypto ecosystem will be far more developed than it even is today when they do. And the reason they're going to have to is because their clients are touching these assets or invested in these assets. And ultimately, as a bank or a large institution, you ultimately probably don't want to be in a position where you're discriminating against your client's assets. Ultimately, you want to be in a position where you have the most holistic view of everything your clients are touching, everything your clients own. And that means everything from record keeping and accounting to taxation to lending, right? And ultimately, I do think we get there.
So everyone in crypto always talks about institutional adoption and how it's coming. You had an extremely interesting viewpoint here, just given your role at Grayscale. And I think you previewed earlier what the initial conversations were like, where maybe you were laughed out of the room. But share a little bit more about, from your viewpoint, where that adoption is on the cycle, and maybe how long it takes until we see maybe pensions and insurance funds start to hold Bitcoin, or if that ever happens.
Yeah, I think ultimately a lot of the most successful sales that were done at Grayscale and probably even across the industry were certainly over the last couple of years. And some of that adoption did in fact come from pensions and endowments and some of these larger institutional players. I think a lot of it was that, one, we were in a low interest rate environment. A lot of trades were starting to get quite crowded. And in some senses, that could be a little scary because that meant that folks were having to go further out on the risk spectrum to find returns. And with not only some of those trades getting crowded, but also correlations amongst assets getting much more concentrated, folks were looking for diversification. It did resonate very often with folks that, I think it was either Cliff Asness or someone once famously said, diversification is like the one free lunch you have in investing. And so for a lot of folks, they were taking a serious look at crypto because it's not like there was some other asset class that was very recently invented and that, had legs that they could actually look into and had resources and the ability to actively get involved in it. But instead, it was crypto. And so was it appropriate, and has it been appropriate for everybody? Absolutely not. And we were never the ones running around telling folks, this is for everybody. Everybody needs to invest in this. Crypto is not for the faint of heart. We've talked, today about 80% drawdowns. Like, there aren't a lot of asset classes that do that. But for the right investors who can appropriately size their allocations, can stomach that volatility, have long-term time horizons, they have generally achieved better risk-adjusted returns by integrating crypto into their portfolios. What's been fascinating about the narratives as well is that different things have resonated with different people. You had no shortage of folks that, for a long time, and many today still do, kind of believe in the digital gold narrative around Bitcoin specifically. Gold's, making all-time highs as, we're recording this podcast. Bitcoin is, back up near its all-time highs, which is great. You have folks that are have been much more excited about, the technology, the underlying blockchain, and, potentially Bitcoin is one of the first incarnations of blockchain technology. And this is a kind of a liquid way to get exposure to the, eventual further adoption of blockchain technology. You have folks that are, today probably a little bit inhibited in their business models by value transfer and, the day-to-day of the hours and functioning of banks and the Fedwire system and things of that nature. And so they're a little bit more attracted to assets like Bitcoin and others where value can move much faster and much less expensively. So I think depending on kind of where you sit within the ecosystem and also what you're traditionally comfortable investing in, there's always been kind of touch points or overlaps where we've been able to get people comfortable. And I think, as we talked about, because it's such a creative ecosystem and we're constantly finding new ways to innovate, there will ever be more of these touch points that get people comfortable with the areas that they're typically used to investing in, whether it's healthcare or energy or whatever it may be. There usually is some kind of analogy or some kind of pairing with something that's going on in the crypto ecosystem.
All right, Michael. So we're gonna change gears a little bit.
Okay.
So we have a set of rapid fire questions.
Okay.
They may or may not be crypto related, and
Okay.
speak freely, and let's jump into it. So I'm gonna go with the first one. This one is crypto related.
Okay.
So
Okay.
who is your favorite voice in crypto?
My favorite voice in crypto. I think somebody that's done a very good job of being vocal in crypto in a way that's tonality has been appropriate and lighthearted and fun is probably Niraj at Coin Center. Not only just touting the work that Coin Center has certainly done for the ecosystem overall over the last many years, but Niraj has definitely brought a certain levity to everything going on in crypto, and he's always been very enjoyable to follow on X and other platforms.
What's a current contrarian opinion of yours, or something you think that most people would disagree with you on?
I don't know that I have a good contrarian opinion. I mean, like the things that I'm kind of excited about, like I'm excited about stable coins. I'm maybe cautiously optimistic about, some of the tokenization efforts that I've been seeing. I think these are good positive steps forward around tokenization, but I'm share some concerns about kind of secondary market dynamics of tokenization of real world assets and some of the other types of assets that are looking to be tokenized. But I don't know that I have a really strong contrarian opinion at the moment.
Yeah, it's fair. Do you think there's a world in which like real estate and all these other assets classes get tokenized, or is there, some sort of bifurcation of assets that makes sense to tokenize versus others?
Yeah, I mean, listen, having come from a more traditional financial background, there's no shortage of assets that are out there that have ridiculous amounts of paperwork and ridiculous amounts of time that take to settle or transfer ownership. If you ever bought and sold a piece of real estate, you probably have to sign your name 70 times to effect a transaction and use all these kinds of middlemen with escrow and you name it. So yeah, there are certainly assets that I think are ripe for tokenization where you can demonstrate provenance and ownership and transfer of ownership and all that kind of stuff. Do I think we need to very quickly move towards tokenizing other more liquid things at the moment? Probably not, because they worked. Do they work perfectly or as efficiently as they could? Perhaps not. But I think over time, we will see an increasing trend towards tokenization, more so for kind of the esoteric, kind of illiquid assets. And I think some of that stuff is also ripe for it.
I think with real estate specifically, until we get titles on chain,
yeah,
it's really hard to like do any transfer without actual paperwork.
Yeah, and these things take time, right? One thing that I will criticize crypto for, and I'm a part of it, is we're impatient. Like we are impatient as an industry, and that's a hunger and a desire to build and grow and all those things, which are good, they're healthy, but there is an impatience around us. Like let's take a minute, let's tell crypto, like look at all the things that's happened even just in the last 10 years, right? We talked about a zillion things, ICOs, metaverses, NFTs, you name it. Like the list goes on and on. There's incredible innovations that have taken place. And so when you think about kind of what could come next, like, I don't know, because 10 years ago, we weren't thinking about any of the things that I just mentioned. Now, set against that backdrop, look at what TradFi's done over the last 10 years. We went from T+3 to T+2 to T+1, right? Like, those are good. Those are helpful, like, steps forward that is shortening settlement times, but I wouldn't call those quite, the same types of innovations that we've seen in crypto. So, there's an impatience to, certainly from outside lookers onto the crypto ecosystem, like, why am I not buying my coffee with Bitcoin, or why am I not, this, that, the other thing? These things take time. And I would say that crypto has done a great job of innovating and staying out in front of a lot of trends. And I've never been more bullish on kind of where the asset class and the industry is going.
What is your favorite financial company or product that you use?
Ooh, favorite financial product or company that I use. Okay, so this is a good one. I'm not an investor in the company, but I kind of wish I was. I would tell folks to take a look at things like Lolli, Lolli. Lolli is a plugin in your browser that you can actually, as you're shopping on the internet, you can actually earn Bitcoin rewards for purchases you're making. And what's fun about Lolli is that, for those people that maybe don't want to buy crypto or aren't comfortable with a wallet or whatever it is, it's kind of an easy way for them to just start stacking sats and, have some exposure to crypto, just kind of getting paid for the purchases that they're already making. So I think it's a smart, sharp, kind of innovative thing to do. And I think the team has been doing a good job and just onboarding more merchants and more places where you can actually earn kind of Bitcoin rewards back, just doing your day-to-day e-commerce.
Alex, the founder, is a friend. So Alex, if you're listening, here's some free PR for you.
Yeah, exactly.
What's a book that's had a good influence on you?
Oh, the book question. I am not as large of a book reader as I probably should be. You don't get that much free time when you're building, as I'm sure you guys know. But one book that probably stands out is probably Flash Boys, which is kind of like a cliche kind of an answer. But I often like to, read things and or watch things. I'm much more of a visual person where I can really feel palpably like I am a part of or experiencing something that I myself was not a part of. And if that piece of literature or that movie or whatever it is does a really good job of kind of depicting it and kind of transporting you into that, those are the kinds of things that I really gravitate towards.
That's a very good answer. All right. If you weren't in crypto, what industry would you be in?
I'd probably still be somewhat in a more traditional financial services role. And there's nothing wrong with that. But I think, not only was Grayscale such an amazing company to be a part of, and we built such a great team and we accomplished so much together. But I think without kind of making the move when I did and taking the chance and the risk that I did, I probably still would have thought that like there really is only one way to work and to be part of a large organization and be a little bit of a cog in a wheel and not really have kind of the ability to actually affect change on your organization. And there wouldn't be anything wrong with that. But I think professionally, I would feel a lot less fulfilled. So I'm really humbled and kind of thankful for the opportunity that I had and the experience that I did.
And you're not leaving crypto anytime soon, are you?
I hope not. I mean, it would be a shame for me to leave crypto. I love being able to advise and help guys like you out as you're building your business and building out, your team and your products and services. And again, 10 plus years into this, I still feel like we're just still in the earliest days of crypto and there's a lot of good things to come for this ecosystem. So I still very much see myself being part of the crypto ecosystem.
So aside from, Arch, the obvious answer, what other exciting opportunities do you see in crypto as you look forward?
Yeah, so I'm advising a couple different companies in the space that I think are really focused, like you guys are, on the infrastructure and the services that surround crypto that I think are really necessary to continue this adoption curve that we're on. One of the areas that I do feel most excited about at the moment is really probably around stablecoins, right? It's an important piece of your guys' business and many other businesses. But the reason that I'm excited about it is because, again, I keep coming back to this analogy that we've kind of been distracted as an industry over the last decade with all these other innovations. And when we really think about value transfer and kind of the earliest, even just the Bitcoin white paper, much of it was about peer-to-peer transfers, right? And so I think stablecoins are really demonstrating, I don't think anyone would have believed that stablecoins would grow to the size that they are today, billions and billions of dollars. But it really is on the precipice of unlocking all of these amazing new applications where I think perhaps we were, as an industry and onlookers, were a little bit too focused on wallet interfaces and would my grandmother be able to pair a public key and a private key to be able to affect a transaction. And that doesn't necessarily need to be the case, right? I think we're moving towards an area of crypto adoption where some of that is being abstracted and moved into the background, and the rails on which value is moving, stablecoins and otherwise, is really going to exponentially take off from here. So that's kind of one of the areas that I'm looking at that I think is really great.
Yeah, definitely. And Michael, I know we could continue this conversation for hours, but before we wrap, do you have any things you want to share? What are you thinking about for next step for you, or what's going on in your life?
Yeah, so my life is busy. Again, advising a couple different firms, enjoying spending some time with family, and ultimately, believe that I will pull back into port somewhere within the crypto ecosystem sometime over the next couple of quarters. But in the meantime, I'm having a lot of fun being able to advise and observe and share my insights. Certainly building a business within crypto, especially here in the US, is no easy feat. And so if I can share some of my best practices that my team did along the way, that's the kind of stuff that I love to do.
Definitely, and we can't wait to have you back in the crypto ecosystem officially, and maybe we'll bring you back here to announce it when the time's right.
Sounds good. Thanks, you guys.
Thanks
Michael.
so
much for coming here today.